Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Right across the board, the market was rather whipsawed following the solid employment report in the US, which may cast some doubts over rate cuts at the beginning of this year, mainly in March. More jobs were added in December than expected, according to the US Bureau of Labor Statistics. The US economy added 216,000 jobs and the employment rate held steadily at 3.7%. Both figures were higher than forecast. However, in a separate report, the release of the service sector showed a weaker economy and raised bets of a faster interest rate cut. So it's a little bit mixed for the start of this year. However, looking towards this week, the Labour Department's Consumer Price Index will be released on Thursday, followed by the Producer Price Index tracking wholesale inflation on Friday. This could give investors another read on the US Federal Reserve's rate view. It is highly anticipated, though, that the market could see a cut in March, so at present I hold that view. Looking back to Australia, we also get the CPI release on Wednesday, and in China they will release it on Friday. Looking at the price action, we can see we did take a stab at that downside, but still holding clearly from around 66.65, and while intact, I feel the market can actually climb higher through 67.5 and on towards 68 cents. And with the broader call for this year, that's 69.70. With the price action also whipsawed for euro, the market respected that uptrend. Clearly from 108 2025 demand lurks, and from the long-legged doji the market is a little bit apprehensive in taking the challenge higher, but I still feel the dollar index, which measures the greenback strength against the basket of 6 major currencies, holds to a target around 100, which was briefly met at the end of December. Still, the upside view is looking towards 110 and maybe on towards 111.5 and reassess. With the given whipsaw price action for dollar yen, it's now questioned whether the squeeze is over. And if so, the market could take a tumble back towards the bottom side of this range, looking towards 144.20 and lower down to 143.2025, and maybe even see a break eventually of this 141.40 area. Broadly speaking, I'm still holding to 138.5. Any upside attempts should be limited. With the Bank of England Governor Andrew Bailey in focus this week, that is on Thursday, and Friday's GDP, the market will be a little bit whipsawed, but given the gains that we're seeing in sterling, I'm still bullish, and I still anticipate the market looking up towards 128 figure 30, and then eventually maybe on to a 130 target. A rather broad call, but still I like the way this pattern is slowly forming since the correction from the low 120. Gold, also a small long-legged doji, but nevertheless there still appears to be a little bit more bullishness in the current pattern, and therefore we could see a rise up towards 2059 to 62, but beyond there I'd go neutral because I feel the market might be a little bit whipsawed, as we recently saw here in early December, and that was a blow off top. So I feel the market might get a little bit in terms of harder to trade as we go higher. And from there, let's see what comes out from 2059.62 in case we get a rejection. Wrapping up with oil, the bulls are still holding to the gains after recently rebounding, looking closer now to this objective, which comes in around 75.50.75. I do feel the market will struggle to take out that level, but if we do see a breach, that could give further scope on towards the region of 78.5. I'm not going to get too bearish at the bottom side of this range here. As we can see, there is good demand coming, and with the indicators firming up, I feel there is further upside to eventually emerge. Well, that's a wrap for the start of this week. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.